Hello everyone, today is Friday and that means another edition of Stock Market Weekly, episode 722 for March 8th, 2024. Thanks for tuning in. Hope you're doing well out there. Let's get into the headlines from this week's trading. Front and center here, we're putting NVDA at the top of our list to pay attention to. High volume sort of turnaround, toppy type action, or at least a action on Friday that sort of suggests that semiconductors, I think more broadly, or maybe it's just an NVIDIA story, needs some time to perhaps cool off and digest a little bit. We're going to look at those charts a little bit later. Wall Street continues to gobble up a tremendous amount of these Bitcoin ETFs. The flows continue to be impressive here. I believe all the ETFs went out at all-time closing highs. Of course, they've only been around for 2 months, but Bitcoin up at those highs as well. We've been kind of hammering home this trade thesis, continue to look good here, and we're going to talk more about that in this week's video. We continue to see this breakout in gold. We started talking about that last week as well, seeing nice expansion there. So gold bugs pretty happy. Utilities were at the top of the relative strength list. So we're going to look at those sector breakdowns in this week's video. And the bond market also continuing to see some follow through, something that we started to talk about the last week or two. So lots to talk about. Stick around here for this week's episode. All right, we've got some charts in front of us. TC2000, that is the charting platform we're using throughout today's video. We do support the platform here at the Trade Risk. If you need anything in terms of education, support, walkthroughs, custom indicators, custom stock scans, any of the good stuff, reach out to us. We work with traders on a daily basis, so check us out if you are a subscriber. So let's get into the numbers this week. On the right-hand column here, you can see a mixed week, but mostly red week. So the Dow Jones, the S&P, the Nasdaq, all finishing in the red. You can see the Nasdaq was down 1.5%. Our small cap bet here starting to pay off a little bit. That rotation that we've been looking for, hoping for, talking about these last few weeks, really the last couple of months, seems to be playing out here. Take a look at the 1 month returns now. You've got the Russell 2000 pretty convincingly out in front here, up 7%. Once again, this is short to medium term action. Look back over a year and the Russell 2000 has severely underperformed. So let's continue to monitor this, but that was the action for the major US indices this week. We also had this notable uptick here in volatility. Now, volatility has been subdued and it's still arguably very subdued, but you've got the VIX now just under 15, which is actually a little bit higher, a little more giddy kind of than it has been over the last few weeks of trading. So I think that's notable here as we start to elevate a little bit. You can see Nasdaq volatility almost back up at 20. Nasdaq vol tends to stay a little more bid, but it is notable here that we're seeing a little more kind of fear of protection come back into this market on not so heavy of a down week. So let's take a look at sectors here. Again, you can see most of the sectors, in fact, green this week, right? A little bit different than the indexes, which 3 of the 4 in red. But when we look under the hood and we look at sectors, get a little more granular, then you can see some things a little bit more of the market was working. Utilities was the top of the list though, so that's a surprising kind of top name relative strength performer this week. Real estate, which has been an idea that we've talked about the last couple weeks on this rotation back up for real estate, second spot, and then materials in the third spot. 3 sectors in the red this week. It was consumer discretionary, it was technology, and it was communication services. Let's take a look at these sector trends here. So this is our Trade Risk Smart Trend Filter. It's available for TC2000s. You can download it on our website. It's also available for TradingView. It's the one indicator we have for both platforms here. Not a whole lot of change. So even though we did get weakness in communication services and tech, it's not weak enough to really sort of break down these longer term, in this case, daily time frame trends. So I think we still have to give the benefit of the doubt to the buyers here, or the bulls that are in control, but you can clearly see, for instance, with the communication services, look at all of these yellow dots here over the past 6 or 7, 8 weeks. And this indicator, what that's telling you is that there's some indecision going on here. There's some mixed currents. There's some warning signs that are being printed. It's not outright a bear sell signal or a trend reversal at this time, but it's telling you to pay attention because something's changing. So I think communication services with a bunch of yellow dots being printed is sort of a good illustration of that. Same thing with consumer discretionary. You can start to see those yellow dots racking up as well. Now, if we take a look here at market breadth, we continue to see, or in my opinion, continue to see a pretty good, healthy undercurrent underneath the hood. So if we just, again, look at one of our favorite metrics here, which is just very simply looking at the percentage or the number of stocks hitting 52-week highs, and take a look at the expansion we've seen here of 52-week highs being made across the NYSE over the last couple of months. This is still some of the strongest breadth in terms of 52-week highs that we've seen since 2021 timeframe. So it's been a while. And again, this sort of fits into this narrative and why we've been kind of saying, hey, some rotation out of the mega caps and some relative outperformance out of the small caps is what we expect here in this time period, or in the going forward time period. And this week, again, is more sort of emblematic of what we've been looking for here. And we continue to see this playing out in that sort of fashion here. We can take a look here at stocks above a 250 and, continue to see those do pretty well as well. Now, if we take a look at IBD's top 10 stocks here, their IBD 50 list. I don't know if this one got updated over the last few days, so this might have changed around a little bit, but thanks to Investors Business Daily, they are a sponsor of the show, so shout out to them for making the show possible. You can support us, you can support them with a link in the description of this video. Get access to their IBD digital subscription, pretty nominal fee, gets you a curated list of stocks here, high performing stocks. You can see pretty mixed race here. CleanSpark having a good, top of the list here move, but we also had GCT and Oscar Health and a couple of other double-digit losers here. So it's, again, mixed for technology, which is kind of where a lot of this list tends to come from. Moving on to commodities here, we've got Bitcoin at the top of the list, almost 10% up this week, followed by silver and gold. Really, commodity land was pretty well, in pretty good gear here, except for the oil and the natural gas, which are biggies, but, they were certainly the underperformers here. But what certainly helped some of this dollar-denominated commodities is the fact that the dollar is finally rolling over. Again, that's something that we started to talk about these last few weeks as well. Felt a little toppy, felt a little tired. Well, this week we actually got a little bit more of a convincing breakdown in the dollar. So that was certainly something to take note of this week as well. Along those same lines, we also saw yields continue to move down, aka bond prices or bond funds, ETFs, remaining bid or getting some follow through, as we talked about at the top of the show. This is the yield index here that we're looking at. And you can see, again, we're starting to see just more breakdown or kind of follow through to the downside here across the maturities, which again helps play into just the interest rate expectations, perhaps again the dollar coming down, small cap rotation, all of this fitting into the same theme that we've been beating the drum of for the last few weeks. So that is all of the data. Let's get into some charts now. We're going to kick it off here with the S&P 500. This is a weekly time frame, heavy volume coming through this week. So we had some above average volume. We did have, Fed testimony. We had the jobs report out on Friday. So there were some economic sort of catalysts here that the market was waiting to sort of suss out. And so, when we look here at the weekly chart of the S&P 500, you get a little bit of an ominous look here. You've got this kind of doji where we traded down, we traded up, and we basically closed slightly negative here, but almost where we opened. So it's kind of a wide range and then do nothing type of week. And so this kind of sets us up in anticipation for perhaps a trend change here. We need to see some proof of it, but it's just a fairly ominous look here on that weekly time frame. Let's go down to the daily chart here of the S&P 500. And again, you can see with Friday's action, this again throws a little bit of cold water here just in the short term about this market ability to continue to trend and follow through. Now, again, it goes without saying the S&P 500 has been in a monster move here. So digestion, sideways, a pullback. Look, it's totally within the realm of possibilities, and in fact I would certainly welcome it at this point, but it doesn't mean it has to happen either, right? We talked about, I believe in last week's video, the fact that the S&P 500 is selling off in these abrupt kind of 1 or 2 day sessions and then not getting any follow through. So it's a quick kind of everybody rushes for the exit door, and then the magical bit appears, there's no follow through selling, and the trend continues. So this time around, we've got the reversal, right? We tried to, we did, in fact, intraday make new all-time highs up close to 5,200 on Friday, but we ultimately rejected those levels, reversed, and in fact put in a bearish engulfing daily bar on just barely kind of slightly elevated volume here. So there is a little bit of short-term room of or signal of caution here. Aggressive folks that are looking to short, maybe you've got something to use against today's highs. If you like the turnaround action today, again, we're still of this belief. We've been mostly talking about the Qs here, and the Qs kind of show it a little bit better. But our opinion has been that the Qs could relax, digest, come in a little bit while we see the Russell 2000 maybe get a little bit of that rotation. The whole market could come down, but the bet here is just that the Russell 2000 would be a better place to kind of hang out. That's been the trade thesis we've been kind of talking about. So if we go back to the S&P 500 and we just think about some of the levels that we could come back to, I mean, getting follow through, I think, for sellers is going to be the first step in this journey here of a potential turnaround, because follow through sell days have been very hard to come by. So if we start breaking back below 5,100, if we start breaking back below this range here from late February, that I think again will give you a little more confidence or evidence here that maybe this market can in fact put in a more meaningful pullback. We haven't seen the S&P 500 pull back more than a couple of percent here, really going almost all the way back to October, November timeframe. It's been very tough to get a sustained pullback. So let's see if this time's different. Let's see if we can get that action. We get a bearish engulfing day here, heavier volume, outside reversal. There's some signs here that the market wants to take a little bit of a breather. Nasdaq 100, take a note here that this more convincingly has fallen back into this range. It didn't make or stretch up as far as the S&P 500 and making new highs. It briefly made new highs today, but again, just quickly kind of cemented back down, closed on the lows, engulfed yesterday's session. Heavy volume coming in today on the Qs here. This feels tired to me. And again, we talked about last video here, this gap fill that never got filled. I thought this would get filled a lot quicker. It didn't. We went sideways for 5 days, and then we saw this nice squeeze action here, digesting through time. But then, we pulled back here earlier this week. Then we pushed up again. So it's been some violent kind of two-way trading here. And again, kind of signaling that this might be time to actually pull back here. And, Qs as a first preliminary target could come down to that 415 level, give you about a 6-7% pullback from highs. That would be totally healthy and still a very constructive market environment that I would not turn overwhelmingly bearish. I would just welcome some, essentially reset here in the short to medium term. Russell 2000, again, pushed up today, rejected, closed towards the lows. This was the only index to close green on the week. Again, it's got a little more of a healthy trajectory here. It is still at this kind of big, longer term. If I zoom all the way back, go back to 2022, kind of this top end of this resistance. I think most people are probably drawing the range, closer down to here around 200 or 205 and saying that we are breaking out. That's fine. It doesn't really matter in the big grand scheme of things. I do think that, again, we're getting this upward bias here. We did have some heavy volume, did have a turnaround. So we got to, brace for a little bit of a pullback here, but I still want to make the case that Russell might be a little bit more of an outperformance play here over the next couple of weeks until kind of proven otherwise. So that's the way I'm looking at all of the major indices. Let's talk about the VIX, because again, like we mentioned at the top of the show, it's getting a little more jumpy here. You can see again going back out into the weekend here at almost 15. You've almost got like a little stagger series of kind of higher lows here for the VIX over the last couple of months. So it does seem like there's some protection happening here, some front running of maybe again this pullback that we might get in the market. So keep an eye on that. But VIX feels little bit more kind of jumpy and wanting to rally here, and I think that's notable. We did talk about the dollar, so this was positive, or generally positive here for the market, that we did get that dollar rollover. It's been, you know, kind of resilient, had a very strong start to the year, kind of went sideways for a few weeks, and now it's breaking lower. Not crazy volume, but starting to see it. Gold was one of the more positive areas here. We talked about this last week, and we saw more follow through, heavier volume, and more expansion in range here for gold. I think that means basically unanimously here that this breakout is for real. It is getting some legs, and it is moving above a multi-year, almost 4-year high here as it moves into sort of new all-time high territory. It's up. Oh, sorry. This is a monthly chart, but you can see just how clean this monthly chart looks. This is the weekly chart. It was up 4.5% this week. Again, kind of had a gap and go start to the week, and heavier volume coming in here. So it's a little bit tougher to chase, of course, at these levels, but gold seems like it's in this nice state of working. You can see the daily volume that is coming in here, and continues to work nicely. Our new trading system, GALAHAD, it does have a core position here in GLD, so, or actually IAU. It's basically the same thing, just a gold ETF. So enjoying some gains on our new trading system that launched this Monday. We do have links in the description of the show if you want to learn more about that. That'll bring us actually, well, let's take a quick look at silver. Silver here, not too shabby as well, up 5% on the week. Different than gold though, because it's certainly not clearing multi-year highs here. So in 2021, the SLV ETF was up around 25, 26 bucks. You can see silver, the SLV ETF right now is at 22.5. So it's much on a marginal basis here, you know, kind of lagging a little bit, but still structurally a nice weekly kind of breakout. Does look like it can run, and in fact it looks like it could probably run to the top end of this range around 23.50. Another point or so for silver over the coming weeks would probably make sense to me. Don't have a position here myself, but looks like it's got some clearance for takeoff there. Let's take a look at the Bitcoin ETFs here. So IBIT is BlackRock. So you can see heavy volume coming in on Friday. We had new all-time highs briefly set on Tuesday for Bitcoin. And so again, this is the ETF, so it's only had a couple of months of trading history. But on Tuesday, we did get that marginal new high in Bitcoin over $69,000. And then we saw this really kind of violent, aggressive, quick reaction down where we sold off about 10% intraday or 12% intraday. So it was a heck of a move. But you can see no follow through, right? We saw no follow through selling. In fact, the sellers kind of disappeared, and then we floated right back up here in the IBIT the next day, up 8%. And it just seems like there's this magnet, there's this, you know, demand, this push, right, to get back up towards these highs here. So same thesis I've been talking about. I still think it's just one of my favorite trades right now. Overweight it from positioning here, and I'm continuing to stick with this trade. I think it's all about flows. Yes, we can look at technicals. Yes, we look at things that are overbought, but I think the flows right now are pretty much the story you have to pay attention to, and there has been just a tremendous demand and appetite for it, and it looks like with every day, you got more municipalities and more professional investors or pools of capital that are looking to get their hands, or at least have the ability to get their hands on some of these ETF. So I think that is the elephant in the room right now. That's the big story. Continues to act well here. Our new trading system, GALAHAD, it trades Bitcoin and it risk manages Bitcoin. So if you are trying to participate in this new, you know, ETF world of Bitcoin, we have a trading system that is designed to, yes, capture on the upside, but also risk manage the downside, because you have to risk manage Bitcoin. And so you will want to eventually take this off, reduce positions, and sell. That's, of course, what that new trading system does. So that is Bitcoin. Gold. Gold miners also working here as well. So GDX has saw a nice pop here. Again, they've been pretty lackluster, though. It's not like we've seen a tremendous amount of performance here for GDX. I mean, we've seen the miners basically drift lower here. There's a lot of debt, and there's, you know, there's other factors here that are, you know, goes into a gold miner that, you know, makes it sometimes over time just not as fruitful as the commodity itself, which is more of a kind of hard money commodity. Gold miners, though, clearly this week, right, they can certainly run. It was up 15% in the face of gold, which wasn't up that much. So gold miners, you probably got some shots there underneath the hood. And I think that's it in terms of the major big stuff. I want to talk about NVIDIA here. So this is, again, kind of the big story and big elephant in the room for semiconductors, and I guess you could extend it to technology as well. Take a look at the volume that we see here in NVIDIA. This is pretty much the heaviest down day that we can find going all the way back the last few years. You'd have to go back to September time of 2022. Notice the big bearish engulfing turnaround here. So we gapped up to around 951. We pushed all the way up to 974, and then we closed the session below 900 at 875. Very heavy volume. This type of pattern here is suggestive of some profit taking and an exhausted trend to the upside here. So I wouldn't be surprised to see more follow through selling, or at least a cool off period here for NVIDIA. Again, it's in a strong uptrend, so I'm not shorting it. I don't have any position to take that stance, but I'd say today is probably the best looking day you have to short it in a very long time, because you can manage risk and you can get out of this trade if it starts to, you know, break back above 950 or 960 or the day's highs or whatever you'd like to use for your stop loss levels. So I think that's a great spot to leave it. We've got some cold water on this market for sure today. This week. Last week, everything felt a little too Goldilocks. Everything was working. Now we have some signs of cracks and some sellers showing up. So next week, certainly be interesting if we get those follow through sell weeks. The warnings are out there. In the short term, again, you have to know your time frame. If you're longer term, it's probably something you have to just accept and tolerate in terms of short-term pullbacks. But if you're an active short-term trader, you certainly have your signs this week. So as always, I invite you to let me know your thoughts in the comments section below. What's got your attention? What did I miss in this week's video? And as always, thank you so much for tuning in every Friday. Hopefully it was helpful. We've got links in the description for IBD, our sponsor, and also our new trading system, GALAHAD, and also some cool things for TC2000 as well. So that's it for me. Take care. Have a great weekend, and we'll see you in the next video update.